Ladies and gentlemen, welcome back to the channel. AMC stock is up over 5% today. Ape is up over 8% today. And just like we talked about in the last video, AMC is at a very crucial level on a technical basis, but as well as that, the markets in general and where they see riskier assets going. The riskiest assets have been outperforming as of the last couple of trading days, heading into a major catalyst tomorrow morning, which is going to be CPI. Now, the last CPI report that came out was still very high. It was still 8.9% inflation, but what we expected was higher than that. So a lot of people are talking about how this CPI report coming out tomorrow could really start to show inflation is coming down in a big way. Given that, and given that narrative and how these stocks have been performing, it looks like we could set up for a very bullish reaction. But then again, we're going to talk about what could happen if CPI comes in way hotter than expected. If real estate inflation is much too high, how the markets are going to react to that. So let's get into all of this information about AMC, about the broad markets. Let's get to it. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. If you guys want to come trade with me live in real time as well, link down below in the description of this video. So first and foremost, like I said, AMC stock up 5.3% today. Ape is up 8.41%. So doing that U-shaped pattern after we initially sold off when Ape first started trading. So you're definitely seeing some good bullish momentum over the last couple of trading days with AMC and Ape. Even on Friday, AMC was up 12.5%. What's looking interesting on a technical basis is every time, basically in history or recent history over the last 3 to 6 months, every time AMC has gapped up and broke out above a major moving average, the major moving averages being the 50, 100, or 200-day moving average, you tend to get a 20 to 100% rally in the stock after that. And that's what happened on Friday. Broke out well above the 100-day moving average, didn't give any of that back by the end of the day. There's no top wick of this Friday candle. And then today, well, you continued to go higher. And that's exactly what I tried to express in the last video. Now, something interesting that is happening today is we broke out above the 50-day moving average, hit a high of $10.75 per share, and then pretty much came straight back down, and we are now under the 50-day moving average. So it looks like to me either tomorrow is going to be that make or break, probably give us that extended rally, or you're going to find that resistance around that 50-day moving average and potentially fall back down to about $9.60 per share, give or take, in that range, in between $9.70 per share and $9.50 per share. That's the level of support that I would put on this rally as of right now, if those are the words that you want to use calling this a rally. Now, worst case scenario, if CPI is bad tomorrow, heading down to $9.29 per share. That is the 100-day moving average. Now, a lot of people are saying, well, hey, inflation is probably going to come down in a big way, as we have seen gasoline, really one of the main and the most important components to the CPI report, has been coming down. That should serve as a really good positive thing for CPI. And that could ultimately help to, pivot the Fed, to have the Fed slow down raising interest rates, because like I said in the last video, a lot of people don't realize monetary policy meaning the Fed policy, the money policy, that's the best way to think about monetary policy. It takes a while, right? So a lot of those 75 basis point rate hikes that we were getting months ago are starting to affect the markets now, and you've seen a lot of people, like I said in the last video, slowing down. A lot of people realize, even though if you're trying to buy a house right now, like I am trying to buy another rental property, people still think the real estate market is red hot and on fire and they want high prices, but they are starting to come down. Same thing in the rental market as well, right? A lot of people are starting just a little bit, starting to get rid of this narrative that you can just charge astronomically high prices for rent or even to sell a house. That's another main component of CPI that might start to slow down a little bit, but that has a big lagging effect because we were in mortgage forbearance for so long. So that's something ultimately I think would be very, very bullish. Some potential negative things would be in the other smaller sectors, right? Like the services sector of CPI. If that continues to go higher, because demand is red hot for services. If you go to any concert or you go even on vacation at all this summer, you know that damn near every hotel was packed. Like everywhere was packed, full capacity everywhere, right? So we want to see how the services inflation, you know, is reflected in the CPI. That could be something that does spook the markets just a little bit, because after all, if your doctor's office or that hotel, not really a hotel, but like doctor's offices and things like that, if they raise their prices, they don't usually come down. And then you could start to see that wage price spiral at that point as employers demand more money. But as of right now, we're not seeing that. We're not seeing the wage price spiral. And I think, just like the markets think, inflation is probably going to come down coming tomorrow, and that could be a very bullish thing for the markets, and that's probably why a lot of your riskier stocks have been rallying today. Now, as far as the Fed rate monitor tool, 93% of market participants are expecting a 75 basis point rate hike. That means that the federal funds rate would be about 3.25% after September 21st. A lot of Fed members are talking about 3.5 to 4% federal funds rate. So that would be a 75 basis point rate hike and then a 25 basis point rate hike, and you're at 3.5%. If we have to go to 4%, that'd be a 75 basis point rate hike and then 25 basis point rate hikes after that, which could be very logical, but that would be a slowdown to the Fed raising rates, and that would also be a very bullish thing for the markets. Either way you slice it, if we get a 75 basis point rate hike, I think the markets are going to start looking out, because after all, the stock market is forward looking. I like to say this analogy all the time, but if there was a meteor that was 99.9% chance of hitting Earth and destroying Earth, the stock market would virtually go to zero tomorrow, right? They wouldn't be able to halt it fast enough, because who cares what's going to happen over the next quarter or the next 2 quarters if 12 months down the line we're all going to not be here, right? If the world is going to end. Forward looking instrument. So if we get, you know, over a 3% federal funds rate, that 75 basis point rate hike, the markets will probably start to look a lot more bullish over the next 3, 6, 12 months, even if the Fed does not cut rates like we were initially expecting just a week or 2 ago, right? The markets thought the Fed was going to cut rates in 2023. We knew that wasn't going to happen here on this channel, but nonetheless, we're getting closer to the Fed maybe slowing down or stopping raising rates, and that would be very bullish. And here you guys have it, the core inflation rate year over year for August, inflation rate year over year for August as well. That would be the headline CPI number coming out at 8:30 in the morning tomorrow. You do have some ECB speakers as well, nothing too crazy. And then on Wednesday, you do have PPI month over month for August. That will be the next biggest important measurement of inflation after CPI, right, which is tomorrow. I don't think it's going to be a huge deal in the grand scope of things. I think the markets are going to care a lot more about CPI. But hey, again, we will see. I think this report might be something where the markets just pick at, you know, this is bullish, this is not, this is bullish, this is not. But ultimately, it will solidify if we're going to get a 75 basis point rate hike or possibly a 50 basis point rate hike. And then on Thursday, you have retail sales month over month for August coming out at 8:30 in the morning. You have export prices, import prices, New York Empire State Manufacturing Index, Philadelphia Fed Manufacturing Index as well for September, 8:30 in the morning. But forget all that, because on Friday, you have the Michigan Consumer Sentiment Preliminary Survey for September. This survey has been going for over 60 years now, and that's why it's highlighted in red, because it tends to be a major volatility catalyst, and the markets pay very close attention to it. Investors want to know what our average, American citizens expectations for inflation. What do they think is going to happen with their next raise at their job? Are they going to get that? Or are they expecting, job insecurity or instability, right? The markets want to know those things because they tend to be forward-looking things. Now, let's go ahead and take a look at the Ortex data for AMC. And AMC's Ortex data has us at a 28.2% cost to borrow max, cost to borrow minimum at 17.37%, and cost to borrow average at 20.48%. Estimated short interest, the dollar amount is $1.08 billion. Estimated short interest of free float is 21.49%. Free float out on loan about 38%. Shares out on loan almost 200 million. Days to cover 4.37 and 100% share utilization. If we go ahead and take a look at the option activity, you are seeing 96% positive order value for the day, almost $1 million worth of call options bought on AMC stock today, and that has been divided upon 17 orders heading in from institutional investors. So it looks like heading into a major catalyst coming tomorrow. Some people are pretty bullish on AMC stock overall, and that is a very, very good thing to see. Now, if we take a look at this article, this one really deviating here from AMC and even just the broad markets in general, but it says Goldman Sachs to kick off Wall Street layoff season with hundreds of job cuts this month. Key points. Goldman Sachs is planning on cutting several hundred jobs this month, making it the first major Wall Street firm to rein in expenses amid a collapse in deal volume. The bank is reinstating a tradition of annual employee culls, which have historically targeted between 1% and 5% of lower performers in positions across the firm, according to a person with direct knowledge of the situation. At that lower end of the range, which is the size of the expected cull, that means several hundred job cuts at the New York-based investment bank with 47,000 employees at mid-year. So you're starting to see that crunch of, less Wall Street activity really starting to take its hit, and you're seeing Goldman Sachs be the first one to really come out and say, hey, yeah, we're going to have to start laying some people off. So that is a big thing. Josh Brown over at CNBC says the next generation of investors should be taken seriously. And I do think he is 100% correct. If you guys don't know who Josh Brown is, he's a CNBC contributor. He runs his own firm, and he really does have some good things to say. And we're not going to go ahead and read that as of right now because it's too long. But if you guys do have CNBC Pro, definitely give this article a read. I think it is very informational. Now, nonetheless, the last thing that I do want to talk about a little bit more in depth is going to be the technicals, because like I said, guys, we broke out above the 50-day moving average, came back down. We want to see if we can break out above that, and if we get a very, very strong day tomorrow, if you have CPI coming in well under expectations, well, you're probably going to break out past the 200-day moving average around $11.30 per share and possibly get straight to my price prediction in between $11.27 per share and about $13 per share. That would be my expectation, a 10 to 25% rally in AMC, but not just AMC though. That would be like a whole risk on rally, because after all, if you bought stocks in 2021 and you thought those were good fundamental buys, well, what do you think about stocks now? Me personally, there's so many different stocks that I'm looking at buying. It's kind of overwhelming, I guess. You got Square. That looks very attractive. For more safety, you have Yeti. You have Crocs. Both of those, I could see all those companies are going to be bigger companies in the future, and they're all down 40 to 69% over the last year, right? And you could say those are some of your riskier companies, but they're not in the grand scope of, DraftKings, AMC, Affirm. Those are going to be a little bit more risky, higher risk, higher potential return. So I think a lot of stocks like AMC could actually do very, very well tomorrow. But keep in mind, I'm not a financial advisor. I'm not a financial planner. I am not your dad. I'm not your uncle. I'm not anyone that is going to tell you what to buy or where to put your money, because ultimately I could be wrong. CPI could surprise to the upside, and we could all be in for a lot of pain tomorrow. That's just the honest truth. And depending on what you feel is that's really how you should position your portfolio. This is only to give you guys at least my opinion on the situation. Now, the last two technical indicators is the MACD is fighting to go positive today. It looks like it is slightly positive, so that is very good after it was very, very negative. And the RSI is over the neutral level of 50, sitting at 51.27, so definitely showing some more bullish momentum. Might be around the corner. So thank you guys for watching. That is going to be it. Not too much else to actually say. Pretty slow day overall in the markets because we're all getting ready for CPI that is going to be coming tomorrow morning. So that's going to be it. Thank you guys for watching. I will see you in the next one.